Hello everyone, this is Jay once again on another YouTube video, and good morning all the way from the East Coast of the United States. And in this one I'm gonna be talking about my weekly buys, and I'm gonna be reviewing my portfolio to see where we are at and what I am anticipating. Right now we're gonna go to my updates, and these were my weekly buys on September 8th. As you guys know, I love to DCA. That's my thing. Every week on every Friday I deposit, and on that deposit Friday I buy into the companies that I'm thinking they are at a good price right now. So, and I DCA into them. I've been building my portfolio that way. And on Friday, September 8th, let me just take a sip of coffee. Please let me know in the comment section, what are you drinking this morning? Or if you're watching this video later on in the day, what are you drinking at the moment? So right now, let's review my weekly buy. So J&J, Johnson & Johnson, for $4.97. As I explained in the past, not sure why it always goes into the 90 something cents, but I usually try to buy whole dollar amounts. J&J was under my cost per share. I think it is like around $162. We'll review it in a few minutes. So J&J, $4.97. Coca-Cola for $4.94. Kenvue, $4.99. Kenvue took a dip this week, so I'm gonna start trying to buy a little bit more. I like that Kenvue company. That's the spin-off from J&J, so I want to keep them both. And Kenvue started with a very good dividend and dividend yield. And the next one was for Maine, $4.98. I love Maine. They pay monthly, and they give those special dividends every couple months. The next one was for MPW for $4.99. MPW is also at a dip. It was around the $6.60 something cents when I bought it. I'm trying to bring my cost down, my cost per share down also on this company. Realty Income, it was one of my bigger buys for $19.98. Realty Income is still under the $60 price. Is very, very close into the 52-week low, and it also made a new 52-week low this week. So I am being very, very bullish. I also purchased on which I forgot to add into this spreadsheet. On September 6th, I bought another $24.96, and at the price it was at the price of $55.11. So I added almost another half a share during the week. As I told you guys before, sometimes in the middle of the week, if I see that I have some extra money, an extra $10, $15, anything, you guys can just invest. This is not only for the rich. We all can invest, and their portfolios can grow just $5 at a time, $10, $15, $20. You don't have to invest thousands of dollars. I'm telling you. You just gotta be patient though. Have to be patient, invest, and really do your due diligence and research. I am not a financial advisor, guys. On the next one that I bought, it was Pfizer, PFE. It took another dip. I bought only $4.98 just because I wanted to buy some other companies, and I didn't have enough money. I only deposited $100. And when I did my research, I was pretty much I just didn't have any other extra cash. But I'm doing my review later on today, and I'm gonna see if I can buy a little bit more, even if it's $10 on Monday, because right now it's at a dip. I think it's around the $34 mark. Let me go into stock analysis very quickly to see where it's at, and maybe I'll do a video on PFE, because on Pfizer, because right now it's very very cheap. It was at the $34. It closed at $34.25. I would have liked to buy more right here. Um, so right now, year to date, it is down 32.86%. And as you guys know, Pfizer is a big one in the healthcare sector. It's used on all hospitals pretty much, pharmacies and everything. So let's go back down to my spreadsheet, and my next buy was SCHD, my favorite ETF. That's my core for $24.96. SCHD is like my favorite, and I purchase every week on Friday, no matter what. I'm buying SCHD, no matter what the price is. Buying 20, 25, or $30 of SCHD. And if I don't see much sale on that's my term on in the stock market. If I don't see any other sales from any other companies, then I'll just put some more into SCHD. Just like SCHD a lot. I'm gonna be holding it for a very long time. My next buy was Vici, VICI, VICI for $5.98. Because of all these partials right here, it adds up in the long term to $1. So I'm like, you know what, Vici's at a good price right now. They just increased the dividend too, from 39 cents to 42 cents. I'll be reviewing in a few seconds, and I'll let you guys know for sure. So my dividend went up also on that one, my dividends. And my last purchase was for VYM for $4.92. VYM, I'm trying to make it a SCHD little brother. Let's just call it like that. A little teammate, you know. So VYM is another very good dividend ETF. And I really want to build these two, the SCHD and VYM, for the long term. So when I'm retired, I'll be taking some dividends from these two ETFs, and I can live off of that. I can pay my bills pretty much. Okay, now let's go back to my dividend portfolio. Okay, so here it is, guys. Let me zoom it out. Okay, so right here, this is all the information that I usually have. I created this very easily. Pretty much took me a little bit of time trying to put colors and getting the formulas and everything, but I worked on it. If you guys want me to do a video on how to do a spreadsheet like this one or something similar that you could keep track of your dividends or your stocks in just one page, just let me know, and I could create a video and show you guys how to make a quick spreadsheet. All right, so as you guys can see, SCHD is still my top position with 24.1 shares. My cost per share right now is $73.15, so it's under this price that it closed on Friday at $73.67. So that's awesome. I was buying a lot when it was at like around the $69, $70, and $71. What I did was I deposited sometimes during the week like an extra $10, $15, and bought some more ACHD when it dipped. As you guys can see, my performance, I'm up 0.70%. Realty income, I have been very very bullish on realty income as of lately during this dip. I was buying a good amount when it was in the $58-$59 mark, and right now I am buying in the mid 50s. Once it goes over 60, my plan is to just not hold. Just hold and not buy for a little while, so I can continue building my other positions. Because right now it's getting pretty big. It's getting pretty big, that realty income position, and it pays me monthly, which is awesome. I'm really capitalizing on this one. and I'm really, really buying, and I'm holding long term. Realty Income is very, very good real estate company, and right now they invested in the Bellagio, so they're also in the gaming market, which is awesome. That's just great. Um, Procter and Gamble right now, still at 3 shares. My cost per share is 136. I haven't bought Procter and Gamble in a while. It is one of my favorite positions. Um, and right now, the performance, I'm up 10%. Coca-Cola, I bought some a little bit this week. It was right now I have 5.3 shares, and the price it closed at the $58.33. So it's just 1 cent over my cost per share, which is crazy. So I'm up 0.01%, 4 cents. I'm up 4 cents. But I also drip. I'm a big fan of drip right now. My dividends are still very, very small, in my opinion, but they're awesome though. Don't get discouraged. Don't do like me. At the beginning, when I started in 2022, at the beginning of the year, I got discouraged because I wanted to get rich quick, just like everybody else. I wanted to get rich overnight, and I didn't see the growth, and I'm like, oh man, I don't think the stock market is for me. But then, towards the end of 2022, I started then buying again, and I'm like, okay, I'm liking this, and then just been getting dividends since. And all right, so my next is Maine, 14.63 shares, is a monthly payer. My cost per share is at the $38 mark. I'm up 5.65%, $33. I love Maine. They continue to pay, they continue to increase, and they do those special dividends every other month. They have done two this month, two this year, I mean. Sorry, let me correct that. So MPW, I'm still holding. I bought another $5. I think it was this week. It was around this $6.60 when I bought it. My cost per share is still $10.25. I invested in this company a while ago when it was like around the $11, $12 range, somewhere around there, between the $10 and the $12. I had invested, and then they took that dip, and I bought some more to try to bring my cost per share down. I know there was a lot of speculations, but I'm holding for now. I'm not selling. That dividend yield is still pretty good. In my cost per share, the dividend that they have right now is 5.85%. So I'm not complaining as of right now. Sachem Capital Corp. I have 43 shares. My price is $4.13. This one was chasing yield pretty much, so I've been holding it for, I want to say, almost a year, I believe. I'm in the negative, but this is gonna be a position that I'm gonna be moving on from. They have been very inconsistent. They still pay dividends. The dividend is at 12.59% on my cost, but I'm gonna try to find something else, something more reliable like the other companies that I have. My next one is Starbucks, 2.2%. I really, really wanted to go back down to the 80s. Like my cost per share right here, right now, is still at the $95. I'm really, really hoping it goes back down to the 80s. Same thing with Apple. I have 1.5 share pretty much, and my cost per share is $131.49. I'm really, really hoping that Apple also goes back down into that $130 range, 140. If it goes back down to the 140, I'm buying. I'm not hesitating. DCA all the way. I love to DCA, dollar cost average. It's awesome. My portfolio has been growing. as you guys can see here. My next one is FXAIX. This is a Fidelity S&P 500 index fund. And right now my cost per share is $147. I'm up 4.89%. I'm really thinking about changing this one for another ETF. I have a few ETFs in mind, mostly S&P 500 related. And one is VOO, of course, so I can build that position and then maybe do some options in the future once I learn how to do options. I'm not sure. Any of you guys know how to do options? Please let me know in the comment section. And another one that I'm looking at into switching this one for is SPYI. SPYI, I like it. Let me just take a look in Seeking Alpha. This is another website that I love to use. SPYI. It's a NEOS S&P. Whoops. Just give me 1 second. It's the NEOS S&P 500 High Income ETF. I like it. It has been very, very consistent. It just came out in September 8, 2022. And it has been around that $40-something range. But, it has been very consistent. I'm probably going to make a video on this one, but I'm liking it. Look at that consistency. And they pay monthly. As you guys can see here. Maybe I'll do another video. I'm not going to take too long on this one. My next positions are Stag and Vichy. They're both from the real estate sector. Stag, I think, is the future, especially with e-commerce continuing to grow. And right now, e-commerce is like about 15% of the 15% of the oh my gosh, I totally forgot what I was gonna say. But like of the of sales, pretty much of the selling, and real e-commerce have been doing really good. And Stag owns a lot of warehouses, which is where people need to keep their goods and to sell them in the online. Vichy is also at a dip right now. I like it. I'm gonna continue buying. It's at the $31.19. I'm up 0.92%. Johnson & Johnson, as I explained earlier, is under my cost per share. My cost per share is 162, and right now it's the 160. It even went down to like 158, 159. I wish I would have bought there, but I didn't deposit anything. That was I think it was Wednesday or Thursday, and I had to wait until Friday. My next one is Pfizer. I think I'm gonna make a video on this one also. Maybe I'll do one on Vichy and Pfizer. And Pfizer, I have 7 shares. I've been buying a lot during the dip. As you guys can see, I have invested $263. My cost per share is $36.18. I like Pfizer. I always wanted to invest in Pfizer. They use it everywhere, especially in the medical field. In any hospitals, they always use them. And long term, I really wanna. I wanna. This is one company that I wanna hold very long term, until I retire for sure, and probably continue. VYM, as I explained earlier, one of the ETFs that I want to pair together with SCHD. I want to definitely bring it up and have it next to SCHD, but hopefully in the future. Kenvue, 7 shares. My cost per share is $24.55. I have been buying here and there, $5, $10. And Kenvue, they have products that I like. They are the spinoff from Johnson and Johnson. So, it's a company that I definitely like. They have household names, products in there. And then my last position is Bank of America, BAC, 28.2 shares. I pretty much did a lump sum into this company at the $20.50. And I just deposited in there during that bank dip, when all the banks just went down. BAC, JPM, so many of them went down. Citi, they all dipped in price, and I was waiting for like the moment, and I was like, you know what, let me just enter at this price. And I enter at the $20.50, and I'm holding. I don't think I am going to be holding this long term, Bank of America, but once everything goes back to normal, let's just call it that, once interest rates go down and the stock market goes up on a bull run like everyone is predicting, once I have a very good positive in there, I'm most likely going to sell and look for another company. So this is my portfolio right now. This is my yield on cost right now, as you guys can see here. And anything that I am in the positive, it looks like I'm above the yield that any companies have right now. Like Procter and Gamble, I'm probably above their yield right now. And this will be my next estimated dividend payment from each company if they keep this price right here. I gotta look at all of them again to update them. The last one that I updated was this one for Vici for 42. It was 0.415 cents. That's what they went up to. And my next payment is gonna be for around $1.62, which is good. Trust me, it will grow as long as you continue to DCA. Just remember, don't think that investing is for the rich. It is not only for the rich. There's a lot of people. I believe there's like a book, say Millionaire Next Door. There's a lot of people that might be living next to you and you don't even know. They probably have a $2, $3, $4, $5 million portfolio, and they probably don't show it that they do, but they're living comfortably and not working. So yeah, and then this is my estimated yearly dividend total, $332.85. And it continues to grow. I remember when it was like $100 a year, or even less. I remember when it was just a few dollars a year, the estimated. But right now it keeps growing and growing, and that's what keeps me motivated. Just remember, guys, I'm not a financial advisor. This is for entertainment purposes only. But this is not only for the rich. You can definitely invest in the stock market, and especially right now, like Fidelity is the brokerage that I use for my portfolio, and they are very good. They are very, very good. I'm not giving advice. You could just do your research, but I like Fidelity, and they do fractional shares. So as you guys saw in my updates, I buy $5, $24, and everything. I think I'm gonna do a video on Tesla, which is this one right here. Have a challenge. I'll explain it to you guys in the next video. And this is my position size in my dividend portfolio. As you guys can see, SCHD takes 22.8%, O 13%, Bank of America 10.3%, Main 7.5%, J&J 7.9%, and others. You guys can pause it and look at it and see. And please like, subscribe, and let me know in the comment section, what do you guys think about my portfolio? Am I doing it right? Am I doing it wrong? Just give me your opinion, and I'll talk with you guys personally. I'll respond to the comments personally. Yeah, so yeah, just let me know. All right, thank you guys. Please like and subscribe, don't forget. Thank you. Disclaimer: I am not a financial advisor, and this is for entertainment purposes only. Please always do your due diligence before investing in the stock market. Thank you.